Hello, welcome to the Boston Private Income Fund quarterly report for the period ended 30 September 2019. My name is Paul Jones and I am the fund manager of the Boston Private Income Fund. The Boston Private Income Fund is reporting an official quarterly return of 1.73% for the September 2019 quarter, which is equivalent to an annualised return of 6.87% and which once again exceeds our targeted return for the period. Thinktank Group Proprietary Limited, or Thinktank, the Sydney-based non-bank financial institution sector mortgage lender that is the manager, originator and servicer to each of the commercial mortgage trusts that form the basis of the Boston Private Income Fund's investment strategy, again performed solidly over the recently completed quarter. At the completion of the September 2019 quarter, Thinktank recorded total loans under management of $1.2 billion across 1,855 loan accounts. In comparative terms, the dollar value of loans under management has grown since the September 2018 quarter by $307.5 million, a 34.5% increase in 12 months. The quantum of loan accounts under management has shifted upwards by 505 loan accounts, a 37.2% increase in loan accounts since September 2018. The weighted average loan-to-value ratio, or LVR, across the portfolio at the end of the September 2019 quarter was 62.74%. This represents a 16 basis point uptick on 3 months previously. However, it should be noted that 6 months rolling average LVR continues its trend downwards, reconfirming Thinktank's commitment to bank quality credit. Loan arrears in the Thinktank loan book of greater than 30 days also remain within acceptable bounds. Thinktank's most recently published arrears data confirmed the quantum of loan accounts with repayment arrears of greater than 30 days as a percentage of the loan book volume was held closely below 1%, with no onerous anticipated losses nor any significant clusters amongst geographic or industry sectors. Since our last Boston Private Income Fund video report, the Reserve Bank of Australia has announced further reductions to Australia's official cash rate. And as investors will be aware that as of October 2019, Australia's official cash rate is at a record low level of 0.75%. Monetary policy changes at the Reserve Bank level bear a correlation with the rate adjustments in short-term credit markets, particularly the 30-day bank bill swap rate, or BBSW 30, which is where annualised returns to Boston Private Income Fund investors are impacted. So, as the official cash rate shifted over the last 3 months, so too did BBSW 30, whereby, at the time of filming this report, BBSW 30 is at 0.89%. BBSW 30, which will continue to be correlated with movements in the official cash rate, has also driven down returns on term deposits and other interest-based income products, one of which being the Boston Private Income Fund. However, investors should note that the fund's margin over the BBSW 30 rate has been maintained in line with historical levels and has also outperformed its targeted annualised return for the September 2019 quarter. Whilst we cannot influence the rates set by the Reserve Bank of Australia, or by credit markets for that matter, our management team will always work to preserve the Boston Private Income Fund's margin above these rates and ensure the integrity of the fund's underlying assets. If you have any questions about this video report or your current Boston Private Income Fund investment, please call me on 02 8920 8886. Thank you for watching another of our quarterly video presentations.